Hello, ladies and gentlemen. Good morning to you, and I'm so excited to be here with you this morning. And I hope you do had a wonderful weekend. Well, it's the start of a new week, so happy Monday to everyone. And let's quickly confirm that we are good to go this morning by confirming that you can actually see my screen and you can hear my voice clearly by typing hi in the comment section. So I would like to see some feedback. So if you can actually see my screen and hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So let's see what we have right here in the comment section. Okay, I can see we have dozens of people online. Good morning, everyone. Okay, it's 393. Good morning. Ikmetedi. All right. Hi, how are you? Good morning to you too. 5008. Glad to have you around. Mutambaika. I hope I pronounced that correctly. Good morning to you. Vivi, good morning. 461. Good morning. Francisco 56. Hi, good morning. 617. Good morning. All right, I think I will be taking this as a positive confirmation that we are good to go this morning. I'm so excited to welcome you to another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, today is the first trading day of the week, and as usual, what we normally do here is to choose some random pairs at the beginning of the week, after which we continue to review these pairs on subsequent days till the end of the week. Though I personally have some couple of pairs, I think I have like 5 to 6 pairs that I am looking forward to for today, for this week rather. But if you do have any commodity financial instrument you want us to look at for this week, it's the most appropriate time to drop it in the comment section, and I promise you that we shall be monitoring this pair throughout the course of the week. And for those who are joining us for the first time, you are welcome on board. Glad to have you around. And what we simply do here on the Extreme Speed Live is simply to gather here as a community in anticipation of the New York session. So what we simply do here is to review financial instruments that we have chosen, and we continue to monitor them, make decisions on this pair, simulate possible scenarios that are likely going to be happening during the New York session so that we can use this information to guide our trading activity during the New York session. So once again, you are welcome on board. It might look a little bit complicated at first when you join, but it's okay. With time, you get to understand how this works. So my advice is that you try to stay tuned in till the end of the session and join us on a daily basis, 10 a.m. UTC, as you be part of this. And with time, you get to understand how it works, and you will be able to use the information you have gathered here to make your own personal decision on the pairs that we will be reviewing herein. So once again, you are welcome on board. I can see Carrie. Good morning, Carrie. Glad to have you around as well. I see 884. Hello to you too. So with that being said, right now we shall be going right into the business. So the first thing we are going to be doing this morning, as usual, is to look at the macroeconomic calendar, as we have series of macroeconomic events to look forward to for this week. And you all know why this is very important. Despite the fact that we are looking out for technical structures in the market, if there is no liquidity, this technical structure we have identified is null and void. So what this macroeconomic does is that it brings some liquidity into the market to drive price movement in whatever direction we have positioned ourselves to take advantage of a trading opportunity. So we are going to be looking at the macroeconomic event that we will be anticipating for this week, and for today rather. And so for today, we have 3 macroeconomic events we are looking forward to. And the first one we have here, remember, we have the nominee for the Bank of Japan's governor, that is Ueda. So he's going to be having a speech today. But with the look of things here, we really do not have a time frame yet of when this event is going to be happening. But I hope that with time, we get to this might be updated with time so that we can know when this is going to be happening, so that we can look at the market structure to anticipate the possible movement of price action. So we'll continue to check on the economic calendar to figure out the time frame for the Bank of Japan's governor's nominee speech. Then going forward, we have the durable goods order, which is coming up in, I think, 2 hours 30 minutes from now, and this is a very high impact event. And if you look at the data we have here, the previous data came in with about 5.6%, and we have a consensus projection of -4%. That's quite to the downside, if you ask me, and this might likely bring a huge variance if the actual data comes in at that figure. So we are going to be anticipating this one as well to see if price will come as expected, or is going to be beyond expectation or below expectation. Let's see how that is going to be playing out. In 2 hours 30 minutes from now as well, we also have the non-defense capital goods order, and the data we have here for the previous data is -0.1%, and the consensus projection is 0%. So that's a little positivity in the here for the US dollar at this one. So let's see how this is going to be playing out in the next 2.5 hours. So we shall be diving right into the market to see what is really going on, and whatever market structure we are going to be identifying here will definitely be what we shall be using to guide trading activity for today and for this week. So with that being said, here the first commodity we are going to be looking at this morning, as usual, is the US oil. And doing a top-down analysis here, we shall be looking at the daily time frame first of all. So what I did through the course of the weekend was to bring down all the technical drawings we have on this chart and draw a fresh new perspective on this one. And when I did this was what I was able to find out on the US oil. Well, the first thing you would observe here, in the last 7 to 8 months, we can see that price action has been bearish. And to further emphasize the strength of the sellers at this point, we connected the series of lower highs here, which has given us that resultant bearish trend line. As you can see, price has consistently respected that bearish trend line to the downside. However, things got a little bit interesting during the last quarter of last year, when we saw this huge consolidation phase between the $82 level and the $70 area, which has lasted about 4 to 5 months now. And it's quite impressive that this market has been caught within this range for quite a long time. And if we look at the fundamentals around the US oil, you will know that it has been due to the Russian oil cap, and most recently the expectation that since the Republic of China has lifted the COVID restriction and opened the economy for renewed transaction, there is a high hope that the demand for the US oil might increase, owing to the fact that the Chinese economy is the highest importer of oil commodity in the world. But in the last 2 months now since this has happened, we are yet to see that traction in the market, as price action still remains within this consolidation phase. Now, if we look at what has been happening here since the month of December, there is one thing significant about the structure. We can see attempt by the buyers to try to incite a bullish momentum at this area, and as a result of this, we can see that the current price action has transitioned into higher lows here. And if we do connect the series of higher lows here, what do we have? We have a bullish trend line to emphasize the bullish attempt by the buyers in the last 2 to 3 months now. But the negation of bullish attempt at the $82 level continue to increase, as we can see that every attempt by the buyers to break out of the structure has been negated by the sellers at the $82 level, hereby suppressing any bullish momentum here. Now, in addition to this structure, there is another key important structure I would want us to lay much emphasis on, and that is the $76 area. And if we go to as far back as the month of September, you would notice how the $76 area has been a major determinant of price action. Look at what has been happening since the month of September. At one point in time, the $76 level was a strong demand zone, as you can see here. In the month of September, we saw bullish attempts around that area as well in the month of November. And since the breakdown happened here during the first week of December, we saw some selling pressure below the structure, as you can see here. We saw some selling pressure. We saw some buying attempts around this area. And in the last couple of weeks now, we have seen a situation where price has been trading around the $76 level. And through the course of last week's trading session, we have seen price come back into that structure. So the $76 level is going to be our yardstick for trading activity for this week. So how are we going to be using this structure to guide trading activity? Well, price action is currently trading around this area. And if we take into consideration the bullish momentum that started here during the later part of last week, we might likely see price action continue to the upside in such a way that it breaks above the $76 level, followed by buying pressure above the structure on our lower time frame to incite another wave of bullish momentum, probably back into that supply zone around the $82 level, which also shares a beautiful confluence with that bearish trend line that we identify. So we will know if we are going to be adding more position if price action breaks out of that structure, and if resumed selling pressure comes in below that level, then definitely we might be thinking of selling at that point. But currently right now, where we want to be focusing on is the $76 level, and so we shall be scaling down into the lower time frame at this point, where we want to see how participants in this market has been reacting to this current structure since the beginning of the week. So now when we scale down to the 1 hour time frame, this is what I was able to identify around the $76 level. But before I go down into the 1 hour time frame, I think there is a simple structure I was able to identify on the 4 hours time frame, and I would love to share this with you so that you can have a better perspective into what is really going on in this market. Now on the 4 hours time frame, if you look at the current market structure here, we have agreed that since the month of November, price has been consolidating. We have an indecision phase right now as price action remains within the range between the $70 level and the $86 area. So we have a strong demand zone at the $72 area here and a supply niche at around the $82 area. Now, if we zoom into the current structure here, that is what has been happening in this market in the last couple of weeks, this is what I was able to identify. So I would like to zoom this out a little further so that we can see things more clearly. So now this is what I was able to identify on this chart in the last 2 weeks. It is very obvious that price action has been bearish in the last couple of weeks. As you can see, I was able to connect the series of lower highs here to give us this bearish range that you will see on your screen right now, and price has consistently respected that bearish range to the downside, negating all attempt by the buyers to break out of that structure. Now look at what has happened here. Look at what happened here last week. We saw the breakdown, though we had a buying pressure around that area at one point before we saw the breakdown of that structure during the course of last week's trading session, and that is the $76 level, which I laid much emphasis on the daily time frame. And I said the $76 level, it's going to be our yardstick for trading activity for this week. Now after price broke down that structure, from a technical standpoint, we should be expecting that a retest of that structure will be inciting another wave of bearish momentum, as it will respect that bearish trend line one more time, retest that $76 level, then we might be seeing selling pressure to push price to the downside. Now, this is what happened during the later part of last week. We saw that as soon as the breakdown of the $76 level happened, price action dropped into a strong psychological level at the $75 level, and what happened after that was quite interesting, as we saw buy pressure resume above the $74 level. And if you remember vividly, we were lucky enough to take advantage of this bullish momentum as we rode the move all the way up into the $76 area. Now, what happened around the $76 level makes things a little bit more interesting. We saw rejection here. Price action appeared to be respecting that bearish trend line one more time, but we saw that as soon as price dropped into this downside, what we saw was a hammer candle, which has, from a technical standpoint, has traces of a bullish momentum in this current market structure. And as you can see, price was unable to break the previous low here, which is a beautiful sign that we might gradually be seeing some bullish momentum coming in from this point. And the next thing I did here was to connect a series of higher lows here to identify a bullish trend line, which at this point I will be calling a temporary one, as we want to see how price action will continue to react to this current structure. So going into the new week, we have this bullish trend line, which if price action continues to trade above this bullish trend line, we want to be comfortable in our buy position. And now look at what happened on Friday. We saw price action break back above the $76 level here, which also shares a beautiful confluence with that bearish trend line. And you all know that from a technical standpoint, whenever we have a breakout of a structure like this, there is a likelihood that the trend line may no longer have that capacity to continue to hold bearish momentum. And if price action continues to trade above that trend line, then at this point we want to be thinking of buying the US oil. And what we have seen here is price is trading above the structure. In fact, price action closed above the trend line, closed above the $76 level to send a signal that we might be seeing a bullish momentum for this week. But one thing about this current structure is that we cannot just jump into a conclusion right now, considering the fact that price action has been bearish in the last couple of weeks. So we need to see some further confirmation that will be guiding these bullish buyers. So in order to do this now, we want to be scaling down into the lower time frame to see how participants in this market has been reacting to this current structure since the beginning of the week to decide what our next line of action will be. Now, before I go into the 1 hour time frame, I would like to state here that in as much as we are looking forward for buying opportunity, we are not going to ignore the possibilities of sellers coming in this market. And the reason why we are not going to ignore the possibilities of sellers coming in is the fact that price action has been bearish for quite a while now. So we cannot ignore that fact. So in as much as we continue to look out for buying opportunity, we have to keep our mind open for possibilities that sellers will come in. And to help us do that, I've been able to identify a simple structure which we shall be using to guide our trading activity for this week. And in order to see that, we want to be scaling down into the 1 hour time frame, where I was able to identify a structure here based on how participants in this market has been reacting to the $76 level. So this is the $76 area here, so we shouldn't ignore that key level. As I said earlier, is going to be our yardstick for trading activity for this week. So that's the $76 level. And if you look at what has been happening here since the beginning of this week, you will notice that the week has started on a bearish note. And like I told you on the daily time frame, this is where price action closed last week, somewhere right around the $76.68 level, and we saw selling pressure resume from that structure, pushing price to the downside into around the $75.80 level. So what this simply means is that we have a new resistance point for this week, which is sitting at the $76.68 level. And we also have a support level for this week sitting at around the $75.80 area. Now look at the support level here. It shares a beautiful confluence with a bearish trend line that was broken last week, and you all know from a technical standpoint, whenever we do have a breakout of structure, we expect the price will come back to a retest of structure by pressure to incite another wave of bullish momentum, and it appears that this is likely what is happening here in the last 4 to 5 hours now. So we have a simple flat channel around the $76.68 level, which is the resistance point, and the support level at the $75.80 level. And if you have been part of this community for a while now, you would understand that whenever we identify this kind of structure here, we need to be very, very patient to wait out for a signal that will be informing us of where price action is likely going to go. And how do we use this structure to identify that? Well, what we want to be looking out for is either a breakout retest of the $76.68 level to give us an opportunity to buy the US oil, or a breakdown retest of the $75.80 level to give us an opportunity to sell. So what I'm simply saying here is, if we do cite a breakout retest of structure, we are going to be joining the trend continuation to the upside. However, if price action does break down the $75.80 level, appearance of selling pressure below the structure on our lower time frame, then we'll have no choice than to join that decline, and then this will turn out to be a false breakout if that is going to be the case. So if price drops below this bearish trend line, then we continue to look forward to adding more position to our existing trade. So these are my views here on the US oil. So in order to catch this opportunity right now, I will be advising you to have your sell stop order sitting below the $75.80 level so that you can catch that sell momentum if a breakdown of that structure happens, and a buy stop order sitting right above the $76.68 level in order to catch that move if a bullish momentum is going to be happening from this current structure. So this is what we are going to be using to guide trading activity for today. So I hope that we be on standby so that we can catch any of this opportunity that will be happening. And one thing I normally say here is that you would want to screenshot my screen, that is munch my screen, so that you can use it as a reference point when you're about to make your individual decision during the New York session. So if you do have any questions regarding what I just explained so far, feel free to drop your enquiries in the comments section, and I'll be rest assured that I am willing to be of help in that regard. So let's see. I'll be taking the next 10 to 15 seconds to read through the charts before I move on to the next option. Okay, I can see some comments. All right. Hello, how to trade? Well, you'll need to do some research on that. If you must, you need to do some research on that one. This community is meant for traders who are already trading. So you need to understand what trading is and how to trade the financial market for you to be able to understand what we are talking about here. So I would advise you to do some Googling, look for how to trade the Forex markets, get some basic knowledge, then you can come back here and join us. Okay. Mia 2020. All right. Okay. Hey Mia Gigi, good morning to you. Glad to have you around. You want us to trade the gold? Of course, the gold is one of the pairs on our watch list for this week. Stay tuned in. We'll be talking about the gold in a moment. Okay. Good morning once again. All right, so in the absence of no questions, we shall be moving on to the next option. And the next option we shall be looking at this morning is the US tech. The US tech has been a very profitable trade for us in the last 2 weeks here. In fact, since the beginning of the year, we have been enjoying some bullish and bearish traction as price action continue to move in our favor. But as we go into the new week right now, we want to be having a fresh new look at this market to identify trading opportunity. So the first thing we are going to be doing as usual is to scale up into the daily time frame, where we want to be seeing things from an holistic point of view, after which we will be scaling back down into the 1 hour time frame to make an informed decision for today. So the first thing we are doing is to scale up into the daily time frame, and the first thing you would observe on the daily time frame is the fact that price action has been bearish, and throughout the course of last year, price action had continued to find lower highs, and as a result of this, we had this bearish trend line figured out here. However, if you zoom into the month of June/July, things got a little bit interesting as sellers gradually lost that momentum. You can see what happened as soon as price got into the $11,000 level. We begin to see buy pressure resume from that area, negating all attempt by the sellers to break down that structure. And you can see what happened here in the month of September/the month of November. We saw buy pressure resume from that area, and at the beginning of this year, we saw the significant move that broke out of the $11,000 level, leading to price action breaking out of that bearish trend line to give us a signal that the trend line here no longer have the capacity to continue to hold selling pressure. And since the breakout of that trend line there, price action had continued to find higher highs and higher lows, hereby culminating at the 12,900 level a couple of weeks ago. I think that was at the beginning of this month. We saw our price action got into the 12,900 and sellers resume pushing price, negating all buy pressure. And one thing about that 12,900 level is the fact that it has been a major determinant of price action. In fact, it has been a buy niche at one point in time during the beginning of last year's trading session. We saw buying pressure here, but it wasn't strong enough as we saw price action break down that structure, and since then price action had been trading below the 12,900 level to further emphasize the strength of the sellers from this point. Though we had some breakout retest of the structure here in the month of August, but it didn't hold long, and we saw the breakdown again in the month of August, retest of structure in the month of September, and since then price is yet to break out of the 12,900. So an attempt by buyers to break out of the structure here at the beginning of this month was negated by sellers. As you can see, price action dropped back to the downside. Now, if we zoom into what has been happening here since the beginning of the year, I would like to zoom in things a little bit closer so that we can see things more clearly. So this is where the new year started. The year started on a bullish note. So this is where the year started, around the $11,000 level, and we were actually lucky enough to be part of this bullish momentum as we rode the move all the way up. And if we connect the series of higher lows here, we have a beautiful trend line which has been supporting this bullish momentum all this while. And the bullish trend line was respected not until a couple of weeks ago when we finally saw the breakdown of that trend line, which was a sign that the trend line may no longer have the capacity to continue to hold that bullish momentum. And this was followed immediately by the continued selling pressure from below the 12,900. And right now price has dropped significantly well back into a very important structure at the $12,000 level, a very strong psychological level considering the round figure of that price. And if we look left, you can see that the $12,000 level has been a major determinant of price action in the past. We will not go to very far here. We will just go to as far as the month of November. As you can see, this area was a selling niche at one point. In the month of December too as well, it was a selling niche. In the mid-month of December, we saw how that area was a selling niche. Now, during the later part of last month, the first day of this month, we saw how the $12,000 level was broken out of at the beginning of the month to signal that price action has taken out all the sell positions here, gathered some liquidity to push some buy pressure to the upside. And what we have noticed here in the last couple of weeks is that price is back into that $12,000 level. And what do you notice? You will notice that as soon as price got into the $12,000 level, we have been witnessing buy pressure around this area, which has lasted about 1, 2, 3, 4, 5 good days. We have been witnessing buy pressure from that area. So what this simply tells us is that there is a tussle around that area between the buyers and sellers. And considering the structure of that area, you would agree with me that we are at a critical point in this market where anything could actually happen. Now, what are the things we are going to be looking out for from this current structure during this week? Well, one of the things is there is a possibility that buyers could come in here where buying pressure might resume above the $12,000 level on our lower time frame to incite another wave of bullish momentum. And to further emphasize the possibility of this happening, remember that we had the breakdown of this bullish trend line here, and that was on the 16th of this month. And you all know that from a technical standpoint, whenever we do have a breakdown of structure like this, there is a likelihood that price might likely come back to do a retest of that structure to incite another wave of bearish momentum. So there is a possibility that we could have some buying opportunity from this area. That is one scenario. And if we take a further look at this current structure here, after price tested the 12,900, we saw some reversal pattern evolve in the form of a double top structure. And you all know that whenever we do have a double top structure or reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, as we shall be using it as a yardstick for trading opportunity. And if you draw out the neckline here, we have something sitting at around the $12,300 level, a strong psychological area. Considering the round figure of that price, I would like to give that a purple color. Okay, so we have something like this. And let me remove the line chart and bring back our candle chart. All right, so we have the 12,300, and that is the neckline of that reversal pattern that we have here. So we saw the breakdown of the 12,300. There is a likelihood that price might come back to do a retest of the neckline area, where selling pressure will resume to break down that structure to the downside. So these are one of the scenarios that we shall be looking forward to. So if buy pressure resumes here and climbs above the $12,000 level, we are going to be looking forward to a counter trade opportunity back into the structure where we want to be looking out for selling opportunity. Another thing that could happen here is the consolidation phase here could transition into a trend continuation pattern, probably in the form of a bearish rectangle breakdown retest on our lower time frame to incite a bearish move. So from an holistic point of view, this is what we are looking forward to. But in order to trade this, we need to scale down to a much lower time frame where we want to see our participants in this market has been reacting to the $12,000 level since the beginning of this week. Then use the market structure we are able to identify there to make an informed decision. So in that regard, we shall be scaling down into the 1 hour time frame to see how participants in this market has been reacting to the $12,000 level. Now, if we zoom into the current structure here, I will just zoom into the current structure to see what has been happening since the beginning of this week. So this is the $12,000 level that we identified on the daily time frame, and it's quite obvious that price action has been bearish. I think I would have to show you something on the 4 hours time frame so that you can have a better perspective into what I'm talking about here. So this is the 4 hours time frame here, and this was the double top structure we identified on the daily time frame. We saw the breakdown of the 12,200 level. Price action did a retest of structure last week, which we were lucky enough to take advantage of, leading to the breakdown of the $12,000 level. Now, if we zoom out and look at what has been happening here since in the last 2 weeks, you will notice that price action has been bearish. And to further emphasize this, we connected the series of lower highs here which gave us that bearish trend line. Connecting the lower highs, we have a bearish trend line. So the bearish trend line here is going to be one of the yardstick we shall be using for trading activity. So if price action ever comes within this bearish trend line, if so happens that we join the bullish momentum here and price action tests this bearish trend line, we'll definitely want to be securing our buy position there to wait out and see how price action will be reacting to that level to decide if we are going to be selling. So if selling pressure resumes below the bearish trend line, we'll definitely want to be joining a decline. However, if price action breaks out of that trend line with buy pressure resuming above that structure, it will be a beautiful opportunity to add more position to our existing trade. So I just wanted us to see what is going on the 4 hours time frame. I wanted us to see the importance of that bearish trend line from a long-term perspective before looking at how participants in this market has been reacting to the $12,000 level. So this is the $12,000 level on the 1 hour time frame. Here we go, $12,000 level figured out here. And if you look at what has been happening since the beginning of the week has started on a bullish note. As you can see here, price started the week at the 11,960 and price continued to climb to the upside, breaking the $12,000 level a little bit before we started seeing some selling pressure resume around that area. So we have a new resistance point for the week at the $12,020 level, and we have a support level for the week sitting at the 11,960. Now, you know, when we have this kind of structure, a breakout retest of that structure, breakdown of that structure will be giving us trading opportunity. And what we saw here a couple of hours ago was a breakout of that resistance point at the 12,020, and in fact it triggered my buy position here. But the way things are looking here in the last 3 hours, I'm beginning to see some selling pressure here, which might likely take me out of my buy position. But one thing I normally do is to listen to the market, listen to my structures, as my structure here says I should buy. So anywhere above the $12,020 level continues to be an area to look out for buying opportunity. And if it so happens that we are taken out of that buy position, price action drops below the $12,000 level, or in fact drops further below the 11,960, which is the support level for this week, then we shall be looking for selling opportunities below the structure. But in the meantime, price is currently above the $12,000 level and the $12,020 area, which is the resistance point for the week, and that is why I have a buy position running here. So I will be waiting to see how this is going to go. Now, for trading the New York session today, I want to add one more structure here to make things a little bit easy for us to identify trading opportunity. Now, if we bring out our line chart here, and considering that the week has started on a bullish note, I think we have a bullish trend line, which I will be calling a temporary one in the meantime, drawn out here. So if we connect the series of higher lows here, we have something like this. So I'll be giving the bullish trend line a blue color to differentiate it from, I think, should we make it a little bit thicker so that we can see things more clearly? All right. Okay, so we have a trend line here figured out at this point. So this trend line will continue to guide our bullish momentum. So since we already have a breakout of the resistance point of the $12,020 level, we might likely see a situation where price will drop back into the structure to do a retest of that level, which also shares a confluence with that bullish trend line, which will incite another wave of bullish momentum. And if this leads to a further breakout of that bearish trend line, which I showed you on the 4 hours time frame, it will be a beautiful opportunity to add more position. Now, for that trend line here, I will need to identify a structure for the sake of clarity so that we can be able to use something to guide trading activity around that area. Now, if we go into the past here, you can see that we have somewhere right around the $12,070 level, which I will approximate. We have a structure around there. So let's label this area 12,070, which also shares a beautiful confluence with that bearish trend line. So we are basically working with confluences here. So if price action further breaks out of the $12,070 level by pressure above the structure, will welcome additional position on the US tech. So what this structure is simply saying here is, if price action continues to trade above this bullish trend line and above the $12,000 level, we shall be comfortable in our buy position on the US tech. Now, if this happens during the New York session, considering that we are on a long-term bearish momentum on the US tech here, and the breakdown, the trend line is breached, broken to the downside, remember, we are not getting too excited if that happens. We want to wait out and see further confirmations to really tell us that the trend line is no longer strong enough to hold bullish momentum. So what we want to be seeing is price action do a retest of the trend line or the $12,020 level, or in fact the $12,000 area. Most importantly, look out for selling pressure on our lower time frame, then we could join that decline to the downside. And if a further breakdown of the 11,960 happens, that will be welcoming additional position to our existing trade. But as long as price remain above this bullish trend line and the $12,000 level, we shall remain comfortable in our buy position. And for those who had missed out on this opportunity at the breakout of the structure, well, let's remain patient. The market might give us another opportunity to add more position if it comes back into the structure with buy pressure resuming above this level on our lower time frame. Then we could join the rally to the upside. But if that does not happen and price action continues to the upside here, then a breakout retest of the trend line, which also shares a confluence with the $12,070 level, will welcome additional position on the US tech. So this is what we are going to be looking forward to on the US tech for today. I hope you munch my screen, and if you do have any question, feel free to drop in your enquiries in the comment section below. So I will be moving on to the next pair, and the next pair we are going to be looking at this morning is the USDJPY. Remember, the USDJPY is one of our most profitable trade for last week's trading session. Remember how we took advantage of a buy opportunity right above the 134.150 level here, and we rode the move all the way up into this current structure, and I think we had about 400 to 500 pips profit on the USDJPY last week. And as we head into the new week right now, let's have a fresh new look at the current market structure. Now, looking at the current market structure, I will be zooming into what has been happening here since the beginning of this month. And one thing we noticed since the beginning of the month, remember, we identified a reversal pattern here in the form of a double bottom structure where we had the neckline sitting at the 131.00 level. And we also agreed that if price action breaks out, retest the 131 level, we definitely will be joining a bullish momentum. And this was exactly what happened. A couple of weeks ago, we saw a breakout, multiple buy pressure above the 131 level, and we were lucky enough to be part of this bullish momentum that culminated at the breakout of that bearish trend line. And remember, prior to last week's trading session, we identified this confluence here where we said we are at a critical level. And to further emphasize the confluence of that area is this bearish trend line, which has been guiding bearish momentum since the last quarter of last year. So we had this bearish trend line figured out, and with the trading activity of last week, we saw price action break out of that trend line, which is a sign that the trend line may no longer have the capacity to continue to hold bearish momentum. So I use the word may because we still have not yet have a further confirmation that the breakout is valid, as this breakout we have here could actually turn out to be a false breakout, as price action could still drop back below the bearish trend line to incite a bearish momentum to the downside. So this is still a very good possibility that could happen in this market. Now, as we head into the New York session today, and as price action continue to trade above the 135 level, it has taken us out of the sell positions that are here. What are we going to be looking out for to take advantage of a possible trend continuation? And if possible, is there going to be a reversal pattern here? Well, Since we already have a breakout of structure, there is still a likelihood that price action could still come back to do a retest of structure before another wave of bullish momentum happens. So because of this possible retracement back into the trend line, we need to see how participants in this market is reacting to the 136.500 level, as if we start seeing reversal pattern on our lower time frame. We are still going back to the 1 hour time frame. We are going to be looking at that. If we start seeing reversal pattern there, then we might likely see an opportunity to sell back into the trend line to retest that structure in anticipation of another wave of bullish momentum. So that is one scenario that we are going to be looking forward to here. Then another thing that will happen above the structure is price action transitioning into a trend continuation pattern, which might look something like a bullish rectangular pattern around this area, breakout retest on our lower time frame, then it will trigger a buying opportunity for us. So in that regard, we want to be scaling down to a much more lower time frame to see how participants in this market is currently reacting to the 136.500 level in order to make a decision for today. Now, if I go down to the 4 hours time frame, I just want us to see what has been happening since the beginning of this month. So if we look at the 4 hours time frame, we can see clearly what has been happening since the beginning of the month. It has been on a bullish momentum, and in fact, price action has transitioned into an ascending channel to further emphasize the strength of the buyers at this point. And within this ascending channel, we have this trend line here, which demarcates the upper part of the ascending channel from the lower part of the ascending channel. And as you can see here, in the last couple of weeks, price has been trading at the upper half of this ascending channel to further emphasize the strength of the buyers in this market. Now, with what happened during the later part of last week, we finally saw the breakout of the resistance point of the ascending channel, and it's at this point we want to see what will be happening this week. Are we going to be having a situation where price will retrace like I showed you on the daily time frame? That is, price might likely want to retrace back into structures like the 136, the 135.300, which shares a confluence with that trend line, or the 135.00 level, which also shares a confluence with that trend line in anticipation of another wave of bullish momentum. So these are the things we are going to be looking forward to. So will this week start first of all with a retracement before the second wave of that bullish momentum will happen, or are we going to be having a trend continuation pattern that will just continue outrightly to the upside? So these are one of the things that we are going to be looking at on the lower time frame. So scaling down to the lower time frame to see how participants in this market has been reacting to the structure. So I will be moving down into the 1 hour time frame. And right here on the 1 hour time frame, this is what I was able to identify on the 1 hour time frame. So the week started on the bearish note, as we can see. This is the highest point price has ever been this week, and that is the 136.550 level. And this is the lowest point price has ever been this week at the 136.00 area. So that is the level that price action broke last week trading session to break out of that resistance point of that ascending channel we saw here. Now, it is quite obvious that since the beginning of the week, price action has been consolidating to further emphasize the indecision in this current market. And you all know that whenever we have an indecision like this, it is probably because participants in this market are looking forward to a catalyst that will bring some liquidity into this market to drive price movement. And you all know that we have an economic calendar, we have a macroeconomic event coming up today, which is coming up in, I think, 2 hours from now. We have a durable good order and a non-defense capital goods order. And these are high impact events that majority in this market will definitely want to be looking forward to. And obviously, we shall be seeing the reflection of this anticipation of this event on the chart as price action. And it appears we are beginning to see the reflection of the anticipation of this event as price action is caught within a channel between the 136.550 level and the 136.00 area. And one thing about this structure is it could either transition into a trend continuation pattern or probably transition into a reversal pattern. And how do we want to be using the structure to guide trading activity for today? Well, you all know that whenever we have a channel like this, we all need to be patient here, wait out for a breakout or breakdown of the channel for trading opportunity. So as a result of this, we have a sell stop order sitting below the 136.00 level, just in case price action breaks down that structure to the downside, and a buy stop order sitting above the 136.550 level, just in case price action breaks out to the upside. And what we have been seeing here since the beginning of the week is strong rejection of the 136.00 level, which is a sign that we have we still have traces of buying pressure in this market. So if a breakout of the 136.550 level happens, then this will turn out to be a trend continuation pattern where a retest of the structure or the trend line here will further confirm the validity of this bullish momentum. However, if it so happens that we have price action break down the 136.00 level, then this will be a selling signal, as selling pressure below the structure will further confirm the strength of the sellers here, and we might likely see price drop into the structures that we identified earlier on the 4 hours time frame. Remember, we have an impulsive move that started here last week, and you all know that at one point in time, participants in this market who are taking advantage of this move from this level will want to be doing some profit taking activity, and this will be reflected on the chart as a retracement phase into our golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg. And so we already have structures here at the 135.300 level and the 135.00 area where we might be projecting the culmination of that retracement phase. So if you are a counter trend trader or a scalper, you're comfortable taking counter trend opportunity, then you might want to take advantage of the breakdown retest of the 136.00 level if that is what happens, with a take profit target sitting between the 135.300 and the 135.00 area, which will dovetail to a maximum of 100 pips to a minimum of about 60 to 70 pips thereabout. That's if you are a scalper. But if you are not comfortable taking counter trend opportunities and price action breaks down the 136, I would advise you to just hold on and wait for the culmination of this retracement phase in the structures, and then position yourself around this area for buying opportunity had the appearance of a reversal pattern to join the trend continuation to the upside. So these are my views here on the USDJPY. I hope I was able to make myself clear. And if you do have any questions or you need further clarity on any aspect in what I just explained, feel free to drop your inquiries in the comment section, and I trust me, I am willing to be of help in that regard. So I will be diving into the last pair for today. I'm already out of time. I have 30 more minutes left, but I will quickly take in on the XAUUSD, which will be the last pair we are going to be talking about for today. Now, going in on the XAUUSD. So the XAUUSD was one of the most profitable trades for us to last week on this pair, as we were able to ride some bearish momentum, which led to the breakdown of that bullish trend line. Now, if we zoom out and look at the structure here and look at what has been happening on this chart in the last 4 months, it is very, very obvious that price action has been bullish. Look at how it started here in the month of October, as we saw accumulations of buy pressure around this area, hereby giving us a strong demand zone there. And since then, price action had continued to find higher highs and higher lows. As a result of this, we had that bullish trend line. We have one here, and we had the major one around this area. And during the course of last week's trading session, we saw the final breakdown of that bullish trend line to give us a signal of the possibilities that this trend line may no longer continue to be able to hold that bullish momentum. Now, if we zoom into what has been happening here since the beginning of this year, you would see that the year started on a bullish note after breaking out of the 1,820 and the 1,800 zone, which was a strong selling niche at the end of last year. So the beginning of the year saw the breakout of the 1,820 and price action had continued to find higher highs, breaking out structures like the 1,860, the 1,900, but we saw how the 1,950 negated all attempt by the buyers, and we saw a profit-taking activity. We saw price crashing further to the downside, and right now price is back at the zone where it started the year. So we are at a critical point in the market right now as price action resumes back to where it started this year. So price is back at the 1,820. So we want to be seeing how participants in this market will be reacting to the 1,820. And in fact, on the last trading day of last week, we saw the breakdown of the 1,820 level, and price closed below the 1,820 area, which is a strong supply zone in the past. Let me zoom out so we can see what has been happening below the 1,820. So during the second half of last year, that is between the month of July and the month of December last year, you can see below the 1,820 was a strong selling zone in this market. So what this simply means is that if price action falls within this territory, it's a very strong niche for sellers in this market. And if we start seeing certain pressure around this area on our lower time frame, definitely we want to be looking out for selling opportunity. Now zooming into the current structure here where price is, we can see it's below the 1,820 and currently price is trading within that zone. So one thing we want to be doing right now is to scale down to a much more lower time frame, like the 1 hour time frame, to see how participants in this market is currently reacting to the structure around the 1,810 1,811 area to decide what our next line of action will be. But before I scale down into the 1 hour time frame, I would like us to have some level of expectations here based on what is happening from the long-term perspective. You all know that whenever we do have a breakdown of structure like this, there is a likelihood that we might be seeing some retracement back into that structure to retest that structure in anticipation of another wave of bearish momentum. So we have to keep this in mind too as well, that if we start seeing buy pressure around this area on our lower time frame, it might likely be a retracement back into either the 1,820 or this bullish trend line in anticipation of a trend continuation to the downside. So despite the fact that this is looking more bearish, we cannot ignore the possibilities that buyers could come in to probably shake out some sellers in this market by taking us out of the structure to the upside. So we are going to be looking at how we want to be positioning ourselves in such a way that we can be part of this trade if it finally happens. And another thing that could happen from here is price action could transition into a trend continuation pattern here to incite another wave of bearish momentum to the downside. So let's see what is happening on the 1 hour time frame. Now scaling down to the 1 hour time frame, so we want to see how participants in this market has been reacting to the structure since the beginning of the week. So I will be zooming right in. Okay, I think I need to show you something on the 4 hours time frame. Okay, so we have something on the 4 hours time frame which I will want to run through before we scale down to the 1 hour time frame. So on the 4 hours time frame, look at what has been happening here since the beginning of this month of February. You will see that price action has been bearish since the beginning of this month. And to further emphasize the bearish momentum here, we have a bearish zone which was drawn out after connecting the series of lower highs here. So you can see it has been a consistent bearish momentum to the downside, which led to the final breakdown of that demand zone here at the 1,820 level during the later part of last week's trading session. So I needed you to see this structure here on the 4 hours time frame so that you can have a better perspective into what I'm talking about here. So like I said, on the daily time frame, we might likely see a situation where price will come back to do a retest of structure before that bearish momentum will happen. And remember, we have a trend line here. The 1,820 level also shares a beautiful confluence with that bearish trend line. So we might likely see a situation where price climbs up into the structure before another wave of bearish momentum happen. So now with that information in mind right now, let's scale down to the 1 hour time frame. Now on the 1 hour time frame, let's see what has been happening here since the beginning of this week. So this is the beginning of the week. The week started at around the 1,810 level, and in fact the week has started on a bullish note as we saw buy pressure resume above the $1,810.50 level to the upside. Now we have a new resistance point for the week sitting at the 1,814 level, as this is the highest point price has ever been for this week. And this area happens to be the lowest point price action has ever been for this week, and that is the 1,807. Though this is where price started with a bullish momentum to the upside, but we saw a situation where price broke down that structure to this area. And with the continued buy pressure we have been noticing here, it is very, very likely that this setup could incite a reversal pattern back into that 1,820 level, which I said shares a confluence with that bearish trend line. So in order to catch this move, if it's really going to be the one that is going to be happening for today, then definitely we want to be seeing price action break out the $1,814.50 level, which I told you earlier is the resistance point for this week. That is, this is the highest point price has ever been for this week. So for us to buy the XAUUSD at this point, I want to see price action take out all the sell position around the $1,814 level here to give me a beautiful signal to join a counter trend opportunity. So if we have a position triggered at that point, it's very likely that price action may come back to do a retest of structure to further confirm the strength of the buyers at this point. Then we might want to add more position there. And if price action continues to the upside, that in such a way that it breaks out of the 1,820 level, remember that very important key structure we identified on the daily time frame, which is where price started the year at. This might also trigger another position, and if another buy pressure resumes here, it will welcome additional position on the XAUUSD. So if we are going to be buying the XAUUSD as soon as it breaks out of the 1,814 level, we want to be having our TP target fall within this bearish range that we have here, and that is between the 1,820 level and the $1,830 area. So this is where our TP target is going to be for the XAUUSD for the meantime, after which we are going to be monitoring our participants in the market will be reacting to that zone. Now I want to show you things more clearly on the 4 hours time frame. So like I was saying on the 1 hour time frame, I said if price action, we have our TP target within this area between the 1,820 and the 1,835 if price action comes into that structure. So if price action gets here, we want to see how price action will be reacting to that level to decide if we are going to be adding more position if a breakout of that channel happens, or we want to be joining a bearish move as price action might respect that trend line one more time to incite the second wave of bearish momentum. So these are things that we are going to be looking out for during the New York session today. So let's position ourselves above the 1,814 level to join that bullish momentum if that is going to be the case here. However, if it so happens during the New York session, you know that we are on a long-term bearish momentum here, so definitely we want to be taking into consideration the possibilities of a selling momentum. So to guide our selling opportunity here, we want to see price action break down the 1,807 level, taking out all the buy position that we have been witnessing since the early hours of today to give us a signal that we have a bearish move. And if price action comes back to do a retest of structure, this will also give us further confirmation to add more position to our existing trade. So we have a simple setup here on the XAUUSD where we are looking out for buying opportunity above the 1,814 level and selling opportunity below the $1,807 level. So I hope that we'll be on standby to catch either of these opportunities as we continue to monitor price action. And remember, we're having a macroeconomic event coming up today, and I think as a result of this, participants in this market have formed an indecisive market structure here, where we are anticipating a major catalyst to bring in liquidity into this market. So let's see how this plays out, and by tomorrow we shall come back here to see how well this position is doing. So I think this is the last pair I'm going to be taking for today, and for the sake of those who are not part of the beginning of the live session, I will be running through to do a recap of what we talked about today, so that we can all be on the same page during the New York session today. So the first commodity we talked about today is the US oil. If you have questions, feel free to drop it in the inquiry box, in the comment box below. I will be checking from time to time to see if there are any. So the first commodity we talked about today is the US oil, and I told you how we already have a channel here between the $76.68 level, which is the resistance point for this week, and the support level at the $75.80. And I told you how we are having our buy stop order sitting above the structure to join a breakout of that structure, and a sell stop order sitting below this level to join a bearish momentum. So it's a very simple setup here. I wish you best of luck on this one, and don't forget to munch my screen so that you can use it as a reference point when you're about to make your individual decision. Then we went on to talk about the US tech for today, which was a very profitable instrument for us for last week's trading session. And for this week now, I told you how we already have a buy position triggered at the $12,000.20 level, as price action is still currently trading above the $12,000 area. And to further help us to be able to identify trading opportunity for today, I was able to identify this bullish trend line, which I said if price action continues to trade above the structures, we want to feel comfortable in our buy position. And I told you how I begin to see some selling pressure around this area, which making me to doubt the possibility that buyers will come in. But it's okay. If I've told you I was already in this trade, so if I get taken out, it's okay. There is no problem about that. I know that we are still going to make whatever we have lost as the week goes by. Now, for those who had missed out on the opportunity here, I told you that you want to remain patient. The market might come back to do some buy pressure around this area to incite another wave, so you might want to position yourself in that area. And if price instead continues to climb higher highs, then a breakout of the $12,070 level will be a good opportunity to add more position to our existing trade. Now, in as much as we continue to look out for buying opportunity here, I told you that the trend line here will guide our trading activity for today. And I also said if it so happens that a breakdown of that trend line happens, then this will be a sign that this trend line is no longer strong to hold bullish momentum. And considering the fact that we're on a long-term bearish momentum here, we want to be patient and look out for further confirmation in the form of a retest of either the trend line or the $12,000 area selling pressure below the structure in our lower time frame to join that decline to the downside. And if a further breakdown of the 11,960 happens, we want to be adding more position to our existing trade. Then we went on to talk about the USDJPY for today, where we've already identified a channel where price action has been trading since the beginning of the week, and that is between the 136.550 level and the 136.00 area. And one thing I said here is, you all know what we look out for whenever we have this kind of channel. We either look for a breakout retest to join a rally to the upside, or we look out for a breakdown retest to join a decline to the downside. And the consolidation phase we said is happening right now is as a result of the anticipation of the macroeconomic event coming up in an hour from now. And one thing I said about the breakdown of the 136.00 level is the fact that this is likely going to be a retracement of that previous impulse leg that we have. So this is more or less a retracement phase, where I said we should be having our TP target between the 135.300 and the 135.00 area, which shares a confluence with those trend line we identified earlier. And I also made mention of a caveat here where I said if price action breaks down the 136.00 level, if you are not a counter trend trader or a scalper, you don't feel comfortable taking counter trend opportunity, I have told you to stay out of this trade and wait out at this bus stop here, looking out for buying opportunity to join that potential rally to the upside. So let's position ourselves in such a way that we can catch this move when it finally happens. Then we went on to close the day with the XAUUSD, which is another pair that was profitable for us last week, and we hope that things will work out the same way for this week on this one. And to further make things simpler here, we already have a structure here which falls within the 1,814 level, which is the resistance point for this week. Though we had price started the week at the 1,810, but we saw a situation where price dropped into the 1,807. So what we are saying here is we want to be buying the XAUUSD only if we do have a breakout retest of the 1,814 level, and we are only selling the XAUUSD only if price action breaks down the 1,807 level. So these are what we are looking forward to trade the XAUUSD for today, and I hope you munch my screen so that you can use it as a reference point when you're about to make your individual decision. I think it's on this note I want to be calling it a day here. I can see comments in the house. 603, good morning to you. Razak 83, good morning. Benry, how you doing? First make says hello, good morning. Hey Steamroller, how are you doing? I never knew you were around. How are you doing today and how's work? My Gigi, oh, you're welcome. I wish you a good day too, my Gigi. All right, Razak, once again, have a wonderful day. So on this note, I wish you best of luck during the New York session, and please don't get too excited when we see breakouts of structure. Let's scale down to our lower time frame to look out for confirmations to join these opportunities that we have identified. So once again, I wish you best of luck and do have a wonderful and beautiful evening. Bye bye.